Hello students and welcome to the lecture. So students, as we know that we are covering the financial system, and basically in the financial system we are discussing upon the Indian stock market, right? That's the topic we are discussing upon. And in the Indian stock market, basically these were the topics we had planned for the discussion. Like the starting with the introduction part, thereafter the National Stock Exchange, Bombay Stock Exchange, market participants, regulatory framework, trade mechanism, price discovery. Okay, these were the topics basically we had covered, and the remaining topics are the market instruments, economic roles, and the conclusion. All right, so remember these topics are completely covered. Okay, this topic is in the midway. Midway or the halfway. All right, and these are the remaining topics basically we haven't started so far. Okay, so this is the scenario. All right, so basically what we are going to do in this lecture, we are going to start with the clearing and the settlement. All right, so let's start. Okay, about the clearing and the settlement, we have taken the introduction in the previous lecture also. All right, but here what is important to see that please remember these names you are seeing here: N as double CL, I double CL. All right, why? Because if we talk about the NSE, or we call it as a National Stock Exchange, the National Securities Clearing Corporation Limited. It's a basically, you can say, the clearing and the settlement authority in the terms of the NSE. All right, for BSE, basically we having Indian Clearing Corporation Limited. Okay, so please keep this thing in your mind. When it's come to the National Stock Exchange, the authority to clear and settlement is the National Securities Clearing Corporation Limited. When it's come to the BSE or the Bombay Stock Exchange, Indian Clearing Corporation Limited is the authority. All right. Thereafter, if we talk about the clearing the settlement, and if we go, you can say further, basically, the first thing which we could see here is the matching trades. Okay. After the trading day ends, the exchange matches buy and sell orders to determine which trades have been executed. Alright, for example, you can say this is the trade 1, alright, trade 2, alright, trade 3, alright, trade 4. Okay, alright. During the day, these were the trades. In this one, bid, 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 and the bid. Okay. In this one, ask, 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 and the ask. Okay. So bid was 100 shares at rupees 100. Bid was 100 shares at rupees 120. Bid was 100 shares at 90. Bid was 100 shares at 140. Okay, these were the bids. Ask for 100 shares at rupees 120, 100 shares at rupees 140, 100 shares at rupees 110, 100 shares at rupees 170. So here you can say that there were different trades for the different security, and there were different highest bids and lowest ask. Okay, highest bids and the lowest ask. This is the picture. All right, so if we look at this one, what we have seen in the previous lecture of the trade mechanism, that the highest bid and the lowest ask will be interacted and decided you can say the mutual price, or called market price also. Okay, so this is an scenario. Got it? Highest bids and the lowest ask. All right, so suppose these were the total trades happen in the day. Out of them, this was finalized, this was failed, this was failed, this was finalized. Okay, so if we go by the volume, all right, if we go by the volume, then during a trading day, during the trading day, total four trades were happened, right? Trading day during the 4 trades were happened, but final trade failed trade. Okay, final trades were 2 trades were final. Failed trades are 2 trades were failed. This is the picture on ground. Okay, now look at this definition: matching trades. After the trading day ends, the exchange matches buy and sell orders to determine which trades have been executed. Okay, like in total volume, they have gotten 4 trades. Okay, but out of them, only the 2 trades were executed and the finalized. Means these one, in which the highest bids and the lowest ask determine that market price on which both the buyer and the seller will satisfy to sell off the property, or to sell off the security, or to buy the security. All right, and these 2 trades in which the market price or the mutual price which has been decided is not the price on which either the seller or the buyer is ready to interact and to sell off the security or to buy the security. Got it? That's the main picture in front of you. Okay, so it doesn't matter what is the volume of trade. The main matter is what is the volume of finalized trade. As you can see that which trades have been executed, because this ensures the success ratio. All right, thereafter netting. Clearinghouses uses a process called netting to reduce the number of transactions that need to be settled. Netting aggregates buy and sell orders for each security so that only the net amount is settled. Okay. Basically, netting, you can say it's very typical situation to understand. All right, and it is required the focus to understand it fully. Okay, so I hope that you will focused here so that you could understood. Okay, so basically, if we talk about the netting, it is aggregation of all transactions between parties and offset value of net amount. Okay, aggregation of all transactions between parties and offset value of net amount. It is called the process of netting. Got it? And this is of two type. First is the payment netting. Second one is the settlement netting. All right. So first we will look at the payment netting. What do you mean by the payment netting? So let's write down the payment netting basic definition. Okay. In this, total transaction between the parties involved are aggregated and only net amount is paid. Okay, so remember, in the payment netting, total transactions between the parties involved are aggregated and only the net amount is paid. For example, suppose there are two parties, A and B. Okay, they have done multiple transactions, and after the multiple transaction, it is find that party A owes rupees 1000 to party B. Okay, and party B owes rupees 800 to party A. Okay, you can say after aggregated the all the transactions between these two parties, how much money A owes to B? 1000. How much money B owes to A? 800. So it means that only the net amount. It means 1000 minus 800, only 200. Okay, so you could say only rupees 200 will be paid to party B. Okay, it is the payment netting. Got it? Similarly, if we're talking about the next one, which is known as the settlement netting. First, write down the basic definition. settlement netting, all the transaction, or you can say multiple transactions will be aggregated between parties involved, and the net amount will be offset. Okay, all the transaction or the multiple transaction will be aggregated between parties involved, and the net amount will be offset. For example, A, B. Okay, A bought 1,000 goods from B. Okay, B bought 800 groups from A. All right. So if you look at this picture, what is the net amount of goods? It means that 1,000 minus 800, only the 200. It means only 200 units will be supplied to B. Got it? So this is the settlement netting. Now just look the thing we have seen here. First is the net netting, aggregation of all transaction between the parties and offset value of the net amount. Okay, will be settled down. All right. You can also write it here. And offset value of net amount will be settled down. Okay, and it is of two types, payment netting and the settlement netting. So here we have seen that doesn't matter how many transactions have been involved in the party, whether it's party A or B, or you can say whether it's two party, multiple party, whatever. How many parties are there doesn't matter. Whatever the transaction involved in them, these all transactions will be aggregated. All right, that how much this party holds, how much this party hold, and then both the parties will be, you can say, how much A holds, how much B holds. Okay, both the transactions will be looked on, and after the interaction, only the net amount or remaining amount will be offset, or you can say settled down. Okay, for example, just look right here, 1,800. All right, it means that total transactions will be rupees 1,800. This is an total transaction involved. Okay, rupees 1,100. This is a cross transaction. Okay, so if you look from the perspective of the settling house, or it's in a clearing house, okay, how much value of the transaction they are getting? 1,800. Okay, this is a clearing value, that this much amount they have to clear. But what they are doing, they are aggregating the entire amount so that they could understand that how much A owes to B, how much B owes to A. Okay, and when they do this, they find that only the 200 is the remaining amount between their transaction. Okay, and because A owes more than B, so A will transfer the amount to B. It means 200 will be transferred to the B. Okay, so now you can say only the net amount, which is rupees 200 will be cleared or settled. Alright, not gross amount, 1800 amount. Got it? If we look at here, so all the transaction or the multiple transactions will be aggregated between the involved parties or the parties involved, and the net amount will be offset. Okay, so you can say here the total trade value is for the 1800 units. Okay, and you can say this is an gross value. Okay, so if you again look from the clearing and the settlement house perspective, that these 1800 units and the gross value is to be settled down or to be cleared. Is that a correct option? No. Why? Because if you go dive down in this particular series, you will find that 100 goods from B and 800 goods from A. So in actual, only the 200 units will be settled down or will be cleared. Okay, so this helps the clearing houses to get the actual situation, which is the only the net amount. Okay, only the net amount, not the gross situation. Got it? So please make sure that you will keep this thing in your mind. Okay, what do you mean with the netting? How it's work? All right, because as I have told you, it's a typical to understood. All right, and if you not revise it on a regular basis, if you not learn it here, then you won't be able to grasp the facts and figures for the long time. Okay, thereafter the novation. Like, what do you mean by the novation? Novation is another important one. Clearing houses act as a counterparty to both the buyer and seller in every trade. This process, known as novation, helps ensure that trades are settled even if one party defaults. Okay, so this is an, you can say, official definition. Okay, but this is not for us. Okay, because we are not so aware about the novation, so we are required to understood it. For understood, you can say novation. Just write down the definition I am providing you so that you could understood the basic definition. Novation is basically the legal term refers to substitution of a new contract or obligation from the existed one. Okay, after all parties involved are agree. Okay, so novation is a legal term which is referred to the substitution of a new contract or the obligation from the existed one after all parties involved are agreed. Okay, so you can say, suppose if there is a contract, this one, this is an old contract between the party A and party B. Okay, so this contract could be substituted or changed into the new contract between the two parties by legally only if both the parties are agreed. If any of them is not agreed, so the novation could not be carried on, and it is basically done to ensure that the trades are settled down even if one party defaults. Okay, for you can say, for the sake, suppose if party A promised to supply 100 shares at rupees 100. Okay, party A and party B both are agreed of it. Okay, but what happened? By chance A defaulted. A said that we are not able to supply the 100 shares at rupees 100. Instead of it, we are able to supply 100 shares at rupees 110. What was the previous contract? This one. But right now they are not able. So what could happen if both the parties, party A as well as the party B, they both are agreed that okay, we could convert 100 rupees into the 110, so the novation could be carried on. It means that as per the new rule, $100 shares will be at rupees 110. All right, this is the first scenario. Similarly, what happened if the 100 shares were at rupees 100 was promised, but somehow right now the B is not able to buy it on this price, and they are saying that we could buy it at rupees 80 only. If both the parties involved, then the things could be changed, and as per the new rule, the 100 shares will be applicable to 80. All right. For this, basically we having the three perspective: 1, 2, and 3. The first perspective is the transfer of obligations. Okay. Second is substitution of parties. Third is modification of terms. Okay, so if we go by this one, then the transfer obligation means as per the new contract the obligations could be transferred. All right. Substitution of party means that if suppose party A, party B and party C, all right, if party B and party A had a deal that 100 shares will be buy at rupees 100, but somehow the party B defaulted and they are saying we are not able to buy it at 100, they are asking for rupees 80, which is not suitable for the party A. So what will happen? Instead of party B, party C could be entered into the contract and they could buy the shares at rupees 100 as was promised. Okay, modification of terms means this price could be changed. Okay, so students, basically in this lecture we have done till the novation. All right, in the next lecture we will continue from here. Till then, just revise all the facts and figures we have discussed in this lecture. Be ready for the another lecture. With this note, let's end this lecture and thank you.